Hey, Dan Fitzpatrick here, stockmarketmentor.com, and it is Monday, April 18th. Look, I just finished an hour and a half training session for members. If you're a member, you were either there or you need to be there. But one of the things that was, that came up quite a bit was how to buy these various energy stocks because, there's been so many stocks that have just gone parabolic, and then others, of course, haven't. And so typically, like the typical trading style that anybody should want to follow is you want to be in the strongest stocks. Those by strong meaning they're making you the most money. So you really want to be in those stocks, the top one or two stocks in a sector, maybe the third one, but definitely limit your exposure to the top three stocks in a sector or an industry group. But one thing that you can do if let's say you're kind of looking for a general way to trade in the market, to trade in the energy market here, without taking on too much risk from buying the top stock, even though it's up, 30% in the last 3 weeks or whatever. One way to do that is to go the general way and buy, in this case, the XLE. Now, you are absolutely not going to underperform or outperform the energy sector because this is the sector, this ETF. So at least if the energy market is moving higher, you're going to make money on the trade. And this, for a lot of traders, is more preferable than buying some stock that's absolutely screaming. But on the other hand, you could say, well, I'll just buy the stocks that are down the most because then I'm not going to get hurt. No, you don't want to be doing that because what you're doing is you're buying, basically the worst house in a good neighborhood, and that's fine until the neighborhood goes to crap. What you want to be doing is you want to move your portfolio in the right direction. So by buying literally the average in the XLE, you are bringing in the underperformers, no question about it. But you're also participating in the outperformers. You don't have the singular stock exposure. You have really the profit exposure to the entire energy sector. Now, another way you can do it if you want to get, I guess, a little more specific is the exploration and production ETF. So you look at this, I kind of don't think that 146.63 is the high, but there's no question this is really screamed. But let's look at the individual stocks, and we got 60 here. We'll order them in terms of gains. Let me get to the weekly or to the daily chart. Okay. No thanks. I mean, it's a nice move today, but this isn't really something that I would look at. Comstock Resources, do you want to buy this stock? No, but I'd sure as heck like to own it. I don't know this, PBF. We're seeing a lot of these stocks that you're really not familiar with, but they're moving higher, okay? They're in the XOP. All of these winning stocks are in the XOP. Now, can you buy EQT Corporation? I couldn't buy it here, but I could buy the XOP. We keep on going. See what I'm talking about. Oxy probably looks the most like the XOP chart. And we can go down here, but I'm not gonna. The bottom line is when you're buying the XOP, you're buying all these winners. However, you're buying these stocks that are drifting lower as well. But this is on the daily chart. How many of these stocks that I'm looking at are actually weak? Really? I don't see any so far. I'm sure there's one in there. I wouldn't buy this. The point is, what you're buying with the XLE or the XOP in this case, what you're buying is the diversification of a really, really strong sector. And so this is one way that you can consider going. Same thing with OIH. All of these ETFs are safer investments where you're in the right area, but you don't have to be picking a stock that's been absolutely screaming because you want to be in the best stock in the best sector. That's a real big risk that you're going to get hurt by some kind of a pullback. So you got a theme investment going here without an individual stock risk. Okay, so hope this helps. I'll see you all next time.